Crypto chat room we have, and just really investors in crypto in general, are pretty new. A lot of people only started trading cryptocurrencies maybe like few months ago during the really big bull run. And I've seen a lot of people be really kind of confused and maybe scared about the current trend with the bear market and all that stuff. So I just want to go back in history first a little bit, just to give it some perspective. So first of all, if you started investing in cryptocurrencies, let's say 1 year ago, 1 year from now, you're still up something like 1,000% or 5,000% depending on which kind of cryptocurrencies you bought. So even though now it looks like a really scary, crazy downturn, bear market, everything is burning, for majority of coin holders right now, they're still way up in profit. And really the panic is only among the investors who started buying things very recently. And a lot of people are actually very spoiled by the short-term gains, right? Because like nowadays, if you look at someone talking about, you know, there was a pump and I made 10% in a day, and people will just say, 10%, what's that? That's like so little, man. My Einsteinium pumped 200% in a day. That's a pump, right? But if you think about investing in anything else, that's actually crazy, right? Like 10% gains in a year is really high. And I definitely do believe that as long as you're invested into one of the more solid fundamentally coins, anything coin from Bitcoin, even though I'm actually a Bitcoin skeptic, anyway, Bitcoin, Ethereum, Litecoin, even Ripple, which is the Satan's coin, and I don't think anyone should buy Ripple. If you invest into any of the high market cap solid projects, a year from now, 2 years from now, you will almost certainly have better returns than, you know, S&P, index funds, whatever, stock markets. Cryptocurrencies are still a tiny market, right? The total market cap is something like 300 billion right now, which sounds like a lot. But if you compare it to the markets such as, you know, Nasdaq or any kind of stock market, it's just tiny. And all the people talking about Bitcoin going to zero because it's a bubble, you don't see bubbles in a 300 billion kind of space, right? It's too small. There is not enough kind of like investors, not enough money in the space for it to be a real big bubble. At least that's what I believe, and that's what many people will tell you, right? So from here, what I think is the comparisons to the dot-com bubble are definitely fair, and we will definitely see a similar scenario where a lot of projects will just die going to zero, but also the solid projects will continue evolving, and that's really the future of the crypto markets. And the real challenge right now for anyone investing for the long term is determining which are the Amazons and which are the pets.com, like people say. Which part is, you know, the solid project and which is not. And the big problem with that is actually that people focus a lot on tech. People talk about fundamentals. For example, I'll bring up Cardano, which is a fairly popular coin, ADA. I think most people probably heard of it. So people talk about Cardano and they say it has great fundamentals, it has, you know, PhDs on the team, they have good code and all that stuff. And that's definitely something I agree with. They have probably one of the best teams in the whole crypto scene. But at the same time, personally, I would never invest in Cardano, even though from technical standpoint it has great fundamentals. And I'm telling you, you should try to invest long-term on fundamentals, right? So why would I not invest in Cardano? And the reason is they don't really have a good economic model, which is extremely important for anything you want to make money on. Because when you talk about, you know, the dot-com bubble, that was also a big problem. Many companies had good ideas. For example, you know, pet.com. It's actually not a bad idea if you do it in current market conditions, in the current era of internet. If you have some kind of pet service based on some kind of like website and online sales and stuff, it's fine, it will work. There are many companies who are doing that, but it didn't work back then because of their poor economic adaptation. The same thing is with Cardano. So their premise is that they will provide low-cost transactions and they will provide banking services to, you know, the poor people, like third world countries, African countries, and all that. It's a noble goal, it's a great goal, and it's a service that will definitely exist at some point in the future. But then you have to look at the market cap and you have to ask yourself, is this really a $30 billion business? Because if you're providing cheap transactions, then your revenue from those transactions is extremely low, right? If your transaction costs, let's say, 1 cent, and your entire market cap is, let's say, $10 billion, you need a whole lot of those transactions to actually pay the coin owners to make a profit. right? Like you need billions of transactions for those coins to actually bring in good dividends. There is a lot of like simple math you can do. For example, if my market cap is 10 billion, so I have people owning 10 billion worth of coins. They want to make, let's say, 10% dividends per year. So my entire network has to earn at least $1 billion per year. So if one transaction costs 1 cent, then I have to do like what, $100 billion worth of transactions every year, which currently for current crypto space is really, really high because the adoption isn't here. It can take a long time for people to actually start using those coins. So these are the kind of questions you have to ask yourself. The same thing goes for Ethereum. I'm extremely bullish on Ethereum in terms of fundamentals. If you looked at their Ethereum Enterprise Alliance website, they have like all these huge corporates interested in Ethereum, who are working with Ethereum, who are doing all kinds of like alpha, beta tests on Ethereum. But long-term, economically, you have to ask yourself, is it really a network that's worth $100 billion? It can be in future, in some years, but up until then, you might have something like EOS, which I also hate, but it's a possibility, or something like even some of the less known platforms like Neo or Eternity or whatever. Like there is going to be a lot of competition. So there is no guarantees in the space based on purely like actual tech. You have to consider both tech and economics of the tech. So that's the big challenge really between deciding what to invest in fundamentally. And that's not really something anyone can answer with any certainty. So this is where the big rule of investing into crypto comes. Only invest money that you don't mind losing, right? That's kind of what everyone says, but maybe some people tend to forget sometimes. Because there is always a possibility that, for example, tomorrow we could see some kind of a hack that nobody ever could imagine, and the entire, Ethereum network or Bitcoin network or whatever just gets completely destroyed. It's possible. It's a really small probability, but it is possible. The same goes for quantum computing. That's a big question as well. Quantum computing is being developed, and it could become actually actively used for all kinds of things. And one of the use cases of quantum computing is actually hacking brute force hacking things like Bitcoin algorithms, which is always something you have to remember. There is no safety in this space, even though you think the coin you invest is really sound really solid. So that brings me to the next point. Basically, long-term investing is great, maybe, but also you don't want to see your money going down, right? So how to trade this kind of longer time frames? So the big mistake I see pretty much majority of investors do is that the whole attitude of I'm too far down to sell. I can't sell if I'm 50% down, I can't sell if I'm 60% down, whatever, that kind of thing. So that's actually a really big mistake because it really doesn't matter how far down you are on whatever coin for the markets. Markets don't care if you're down 50% or 90%. They will do what they're doing. So every time when you're looking at the markets and you're thinking, should I maybe sell some of my coins? Should I try to invest into something else? Should I just go to just dollars and sit in fiat, as we call it? Just sell all your coins and look for better prices? You should never look at how far down you are at that point. You should never think, I'm 50% down on my Ethereum, I will not sell it until it's back to break even. Because that really doesn't make any sense. If you think that, tomorrow maybe IOTA will move up more than Ethereum, then you should just sell your Ethereum and buy that IOTA. Of course, you can't always be sure, but that's the thing you have to consider. You have to completely ignore the point where you bought that coin. It's completely irrelevant. Always your initial buy-in price is completely meaningless. That's really the number one lesson everyone definitely has to remember. So, right. So going from there, basically what I want to tell everyone, if you're actually thinking about doing some more active trading instead of just buying some coins based on your research, based on some ICO or just whatever fundamental reasons, if you're going to do some kind of either short-term or medium-term trading, you should never ever trade with your entire investment. That's basically that makes you too emotionally invested. If you see your entire investment change basically based on one action. That's really difficult for even like really experienced traders. It's hard to actually remain rational when you trade with a big amount. So if you're new to short-term trading or you're just trying to improve, what you should always do is just take a small percent, maybe 5%, 10%, even maybe 1% of your entire investment, and trade with only that small amount. Then if it's working well for you, you can increase that part to maybe like 15 or 20%, but never more than that, definitely. Especially if you're going to consider trading on leverage, which is something I will mention a little later, even though it's really dangerous, but yeah, that's also an important part of short-term trading. So when it comes to short-term trading, people have two approaches, which is one is based trading on news, and the other one is trading on technical analysis. Of course, both are related. So the first thing, trading on news, there is actually a bit of, how can I explain it? It's kind of a game of like whether you can fool someone or not in a way, because everyone has the same information in the markets for the most part. Like, of course, there is insider information. There are people who get news faster than other people do. But at the end of the day, short-term trading is a zero-sum game. You always have to, like, someone has to lose money for someone to make money, basically, when it comes to short-term trading. So a lot of things that happen are actually not that obvious until you start thinking about them. For example, recently there was that big Ethereum Classic fork announcement. I think most people will probably remember it. There was a big pump on Ethereum Classic. The price went up to like $40 from about $20, basically doubling. But then before the fork actually happened, like a week before the fork, the price suddenly started going down. And some people were confused, why is it going down? Even, the fork hasn't happened yet. People didn't get their free tokens. But that's kind of the thing I'm talking about. If you are expecting this fork to be something that people will be buying the coin for, the price going up with expectation to the fork, it makes actually little sense for you to be holding that coin when the actual fork happens, because you know that by that point, a lot of people already bought that coin thinking that, the price will keep going up, and you have to make a call when to actually get out to make a profit, because everyone knows that the price is going up, so everyone is buying it. But then at some point, people have to start selling the coin to make a profit. And then when that happens, of course, the price goes down again. So you can't just think, there is good event happening on this particular day. So until that day, I will just hold my coin. Because the whole thing about, buy the rumor, sell the news is completely true. People actually sell coins right before the event happens or right after the event. But people are not really holding coins because of whatever fundamental reasons nowadays, because it's a speculative market. People just want to make their short-term profit and then get out. It's the same thing we saw with, for example, ICX, Icon coin, which is a little sad to me because I'm personally heavily invested in ICX. But if you were following ICX, you saw that the coin was valued at about $10 at the height, at the peak. Then it went down a little bit. Then they had their big event with the mainnet announcement and their ICOs announced and all that stuff. And as soon as that event started happening, the price just tanked all the way to like $5, and now it's below $2. That's kind of the sell the news thing I'm talking about. Even people who actually believe in ICX fundamentally might be selling it because they expect the price to keep going down, because there is really not much reason to be holding that coin right now. It doesn't do anything yet. It's the same with most cryptos. It doesn't do much. So if you think the next big announcement will only be, let's say, 6 months from now, then really there is no hype on the coin anymore. There is nothing to look forward to, so the price is not going to go up. So that's actually, in retrospect, that's something I should have acted on as well. Same goes, for example, VeChain, another coin I'm heavily invested in. And it's a coin I will actually go back to in detail a bit more on technical aspects of it. But again, they had their big rebranding event with a lot of announcements. You would think that, there is a lot of positive news coming out, so the price should go up. But that's not how it works, because everyone knows there will be big news coming out. So people already loaded up on that coin way in advance. So after the news are already announced, there is nothing left to build hype about. So people are just selling that coin. The same goes for pretty much anything when the market is kind of flat or in a downturn. If you look back at the big bull market in summer and in autumn, whenever some coin had a big announcement, the price would actually go up and stay up because the overall market sentiment was different. People thought, if I buy a coin and I'm holding it, the price will just keep going up, keep going up, keep going up. That's what people were betting on. But nowadays, because the overall market trend is much more negative, people only look for short profits. So you have to follow the herd in a way. You can't be a contrarian in the sense that, I know this coin is good, so I will buy it and it will make me money if you're looking at short-term perspective. So the alternative to that is, for example, right now, I'm talking about VeChain, right? So the price is like $3.50. If you're looking as a long-term investment, it makes sense to not care about these kind of short movements if you actually think it will go up. But again, if we're talking about short-term trading, you cannot believe that good news, good kind of like updates will actually make the price stay higher than it was before the news. That doesn't happen. So to comment on that more, like in terms of technical analysis for short-term trading, I actually don't believe in technical analysis on smaller market cap coins. Some people will talk about like Elliott waves or bull flags or whatever. I think on small market cap coins, most movements actually come from announcements and people selling the announcements. That's majority of movements that happen on altcoins. But for Bitcoin and to some extent Ethereum, maybe Litecoin, the bigger market cap coins, I do believe that technical analysis works very well as long as you use it. You don't expect technical analysis to actually predict the future. The point of technical analysis is not to tell you what will happen to the price, really. TA does not tell you if the price will really go up or down. That's not what it does. That's really a big mistake people make. What TA does is tell you which are safe places to buy or sell, which are the more likely places to have a successful trade at. So for example, if you were following my comments in the Crypto of Korea chat, when the big downtrend from 11,000.6 started, people actually asked me very often, should I sell now? Should I sell now? And most of the time my answer was, I would not sell right now, but I would sell if the price is either here or there. And always these points come based on technical analysis. And now you might say, like if I asked you, should I sell my Bitcoin at 10.6? And I tell you, no, you shouldn't, but you sell your Bitcoin at 10.4. That makes no sense, right? Why would you sell it when it's cheaper than it is now? Surely it's better to sell at 10.6 than 10.4. Yeah, that makes sense. But then the probability of it being a successful trade at 10.4 was probably better than 10.6 based on technical analysis. So that's kind of, that's what TA basically does. It gives you the points to consider when you're entering or leaving a trade. And I will look at more specific examples, like how to determine these exit or entry points in a moment. But basically, that's the approach you have to TA. If someone tells you, here is a triangle, if you break this triangle, the price is going up, or, my Elliott waves say we're in wave number 3 on point D, blah, blah, price will go up tomorrow, that's bullshit, seriously. No one knows that. No one knows if the price will go up or down. That's one thing you can know for sure. But if you're doing short-term trading, you have to have targets. You have to have an idea, for example, I will buy Bitcoin at this price. If the price goes down to a certain point, I will sell it because this trade is not working out. If it goes up to a certain point, again, I will either sell it or I will set a new sell target. You always have to have a plan for short-term trading. That's the critical point. And TA is what gives you an ability to have that kind of a plan and stick to it. And the reason why it works, like people say sometimes, the people who are negative towards TA, they say like, why should I believe, why is the price more likely to go up or down at this point? Why is this price important? Why are you saying, at 10.6, it's not good to sell, but at 10.4, it is better to sell? Why it's like that? So there is a lot of reasons, but basically it all comes down to the wisdom of the crowd. A lot of people use the same tools. They look at the same indicators. And they basically follow the same patterns. So in a way, it becomes a self-fulfilling prophecy. If everyone thinks that, some Fibonacci retracement at 62% is important, then people will have a bunch of buy orders and sell orders at that specific point. And then you can decide, if these buy orders actually execute, the price will go up. If they were not enough to pull the price up and the price keeps tanking below that level, then, there's not going to be a bunch of sudden buy orders coming out of nowhere. There's always a reason, there's always a sense to the market. Of course, there are exceptions to that. Sometimes you might say, the price should be going down now based on whatever technical indicators, but then suddenly you see a 1,000 Bitcoin buy order coming out of nowhere and the price does the opposite. That happens. And that's where you just have to take your losses. A lot of people have this idea that to be a successful trader, you actually have to, make a profit on every trade, but that's not actually how it works. If you ask any successful traders who do short-term trading, probably 99% of them, maybe 90%, whatever, but majority of them actually lose on trades more than they win on trades. But the point is that if you have a plan and you have specific targets that are well established, well reasoned, you will only lose maybe 1 or 2% on your losing trade, but then on your winning trade you will gain 5, 10% and more. So for example, can I get this laptop? Yeah. So let me bring up the chart for the downtrend of Bitcoin recently and explain my reasons on it a little bit. So I will actually start with some good news first because I'm a positive guy in general. So if you look at this Bitcoin chart here, this is a very common formation that's called a double top, which people talked a lot about. I'm sure everyone heard about this double top. So the price reached a certain level, which was around 11.6 thousand, failed to go above that level, then the price goes down, and the price then comes back up again to the same level, and again the price fails to breach the same level. And at this point, when you see the price start to go down here, if you were actually in a trade with, Bitcoin you bought somewhere down here or down really anywhere, you would actually do well to sell your Bitcoin here at the top of this second peak. Because this is an extremely strong signal in traditional markets. In cryptocurrencies, this was actually a very scary signal to me. Because if you look back at the history of Bitcoin all the way to the big downtrend from 2014, Bitcoin actually never, ever had a successful double top like this. So if a price came to a certain level, then came down, and then back up to the same level, every single time in the last 3 years or so, the price would actually breach this second peak and keep going up higher. So this was an extremely confusing moment to some traders because this is not something Bitcoin does historically. But if you look at traditional investment patterns, this is extremely common and just a normal kind of turnaround point for the market, which was originally positive here from the 6,000 price up to this 11,000 point whatever price. So if you actually held Bitcoin and you asked me at 11,000.5, should I sell my Bitcoin? I would tell you definitely here you should sell it. And then there would be a caveat that if the price actually went to 12,000, you should definitely buy it again. So that's the kind of short-term trading plan I'm talking about. If you actually want to have Bitcoin for your trade, you should still have this kind of skepticism. So for example, I'm talking about here, if we cannot reach this 12,000 price, which would be higher than the previous peak, it means that there is simply not enough buyer interest. There is no power for the price to keep going up. So the next move will definitely be down. So then, as it turned out, indeed the price kept going down. And there were several shorter term points, but we'll talk about those a bit later, still talking a bit more kind of broad terms. So the second crazy important level was actually here at 9,500, which is actually level, when we first came down from that first peak, we came down to this level, and then going down from the second peak, again, we went to that kind of 9,500 price. I don't think anyone was actually talking about selling Bitcoin at that point, but if someone was asking me, right now I'm holding Bitcoin the price is 9.5 thousand, what should I do? I would say if you're trading short term, if the price goes down any like $100 lower than this level, you should definitely sell all of it and look for better prices. Why is that? So this is this double top pattern we're talking about. So the way a double top pattern traditionally works is the price after the first peak goes down to that specific level. Then if it goes down to that same level down after the second peak and goes below it, that's called a confirmation. And generally you expect the price to at least double that movement. So from 11.6 to 9.4 or whatever, that's basically 2,000, give or take. So from 9.45 price, if that price level is broken, you would generally expect to reach about 7.5 thousands. So if I was trading this, which I actually was, I would be looking to buy back my trading stack basically here where we are right now, somewhere like 7.5 thousand or a little bit below that generally. Because that's generally the price target for a double top movement like this. There is no particular reason which you could explain in, I don't know, like some scientific terms. Why does it move, if it went up to that peak $2,000, down from that peak 2,000, back up 2,000, and then why it's going down 4,000. There isn't really any kind of like mathematic reason or scientific reason for that. It's just kind of how it works. It's what everyone expects. So that's how people trade it. Like, for example, I know for myself, based on just general TA wisdom of usual expectations, I think, this move will end $4,000 from that peak. So I have my buy orders. I will buy that Bitcoin again for the next short-term trade, or at least if I was in a short position, which means I borrowed Bitcoin to sell it and then buy it back lower, which is leverage trading. Anyway, I would be looking to close the trade somewhere at this level. So what happens is, I'm not the only person who thinks that. Anyone who is trading based on TA and who looks at this pattern, they will have some kind of buy orders close to this level. So this means there will be more buyers. This is a likely point where the price will stop going down because everyone is kind of expecting it. There is no magic. There is no kind of like Nostradamus prediction. It's just what everyone thinks will happen. That's where those trades usually turn. If the price did not actually fall below this 9.5 thousand level, let me look in a bit more detail. So here after this peak at 11,700, here you can see we actually stopped going down significantly. Like there was this big red candle, which means the price went down all the way to this kind of important 9.4 thousands. A lot of people on trading subs and also myself as well, we were talking about how this is a critical level for Bitcoin. Bitcoin cannot go down more. If it goes down more, it's really bad. So that's based on this kind of trading. You can actually see that price spent more than a day at this level, just kind of trying to bounce back a little bit, because anyone who believed that this double top would not actually work, were hoping for a reversal, so people would be buying here, people would be trying to kind of keep the price at this level. But then as soon as it goes below this 9.4, you can see that it actually went down quite sharply again, and then the price tried to rebound, but again it stops at this kind of same level and it doesn't go back over that level. Again, because people are expecting that this will be a strong resistance point, because just based on how a double top usually works, this is kind of the spot where you should be selling again. And again, it's not magic, it's just wisdom of the crowd. It's just what everyone expects, so it kind of happens. Because, if everyone is expecting that this is the highest point the price will go to, no one will be buying at this level anymore, people will just be selling and the price goes down again, and that's how it happened. And here, actually, you can see that this level was actually broken for a little bit. And this is actually a point I remember quite well because I actually lost some money trading this because I was stupid. So this was actually one of those moments where something unexpected happened. There was actually a lot of buy orders happening that could be market manipulation, could be someone really rich who just wanted to buy more Bitcoins, whatever, just something that you can't really predict. But for a while, the price actually went up here. So myself, I was thinking, if this level is broken, this is that important resistance level. maybe Bitcoin will actually recover here. It will keep going back up. This double top will not happen. So I actually put some buys here. But the important point was, again, if the price goes back below this level, 9.5, we are again back to the same